Hey, good morning, everyone. This is Coffee with Great Wealth Strategies. This is regular Joe, Eric Kenyon. Got my cup of Joe right here. And today we're going to talk about quantitative easing and how it is poisoning the stock market. For those of you that are baby boomers out there, please listen up to this one. If you are an investor, by now you've heard everyone and their grandmother's opinions on quantitative easing, or QE. While pundits, economists, and politicians have 1,001 theories as to what exactly this form of monetary policy entails, the fact of the matter is there are some misconceptions about its economic impact. Today we'll review the definition of quantitative easing, what it means for investors, and what they can do to avoid losing money due to misguided government intervention. America's relationship with QE began during 2009, when the U.S. Federal Reserve undertook a large-scale purchase of mortgage-backed securities to stem banking losses on non-performing loans. 1 year later, the Fed officially initiated QE2, which was that famous $600 billion program that purchased U.S. Treasury bonds. Finally, as of late September 2012, the Fed was back at it with QE3, an initiative which resumed mortgage-backed security purchases for a foreseeable future. Essentially, it's several billion dollars a month, and there's no end to this at this point. So nearly $1.2 trillion has been spent boosting the balance sheets of MBS, or U.S. Treasury holding financial institutions. Another $4 trillion has been promised in order to backstop the liabilities of these same banks. At the same time, an enormous amount of assets has been passed on to the taxpayer-funded books on the Fed. Not exactly a picture of economic stability, as one can plainly see with this amount of money being spent. Some analysts argue that QE3 has been good for the economy by driving more business into stocks and bonds. However, the risk that a temporary bubble is being created in the U.S. financial markets grows every single day now. And liberal and conservative economists alike warn that a market correction of between 10 and up to 30%, I personally believe it's going to be 40 to 50, but market analysts are saying 10 to 30% are going to happen, and it will throw the economy into an absolute tailspin. The issue may be especially troublesome for the soon-to-be retirees who rely on pensions accounts to fund their retirement. Those who wish to learn how they can spare their savings from losses due to this misguided government intervention in the marketplace should visit us at greatwealthstrategies.com to learn more about wealth preservation today. So thanks for joining us today. Once again, this is Eric Kenyon, regular Joe with Great Wealth Strategies. And please fill up somebody else's cup, pass this around, share it, and we'll see you next time. Thanks.